Good evening, everyone, and welcome to the meeting of the Audit, Standards and Risk Committee for 14th of July. We'll start with the apologies for absence, Eddie.
Thank you, Chair. I've received apologies from Councillor Jonathan Quinn.
Thank you. Next on to item 2, minutes of the previous meeting. These were circulated in advance. Are we all happy that they represent a true record and for me to sign them? Great. Agenda item number 3, declarations of interest. Does anyone have any pecuniary or non-pecuniary declarations to make? Take that as a no. That's good. Rattling. Item number 4 is public question time. We have received a couple of questions, and the public speaker is in the room, Mr. Bain. I think you've been through this before, so you'll read out your question. The answer will then be read out, and you'll have the opportunity to ask a supplementary as and when. Eddie, did you want to just mention something on this item before we start?
Yes, thank you very much, Chair. Just mentioning to the public speaker, apologies for the very slight delay in publication today. In terms of the answers, that's all I wanted to mention.
Thank you. It was just an apology for the slight lateness, I think. Yeah, so if I ask you to ask your first question.
If the auditor was giving a true and fair opinion, would it be so circumspect in only making what might be considered a vague comment that the valuation of the property assets might be questionable? Recognising the various comments made by the leader regarding the delicate state of the council's financial position, might a full up-to-date valuation not have been preferable to what is loosely described as a cycle, by which I assume there is a rolling programme of valuation, and further does the council accept that taking a line through the rental income and applying a yield, the assets look overvalued?
Thank you. Do I read the answer?
Either you can read out the reply or you can ask the committee if taking it as read. Or...
I'll read it out for the benefit of people on watching online. The reply was, for the 2024-25 accounts, 100% of assets were revalued in a bid to gain assurance over our assets in what will be a disclaimed set of accounts due to opening balances. In any ordinary year, investment property would be valued annually and all other assets on a rolling programme at 20% per annum. For those assets not valued annually, the valuer is required to make an assessment of any material changes on those assets or group of assets, which is then subject to audit. Much of the council's land and property is open space, which doesn't have an income, and this will mean a lower than typical income to value ratio for a property portfolio. Would you like to ask your supplementary question?
Right. Well, I deem that there's no one in the room who will be able to answer these questions, but I would like to direct my questions to Councillor Wilson, who I know is an avid note-taker and even more interested in figures than I am. I've taken the accounts of this council back to 2015, which was before any of the property assets were acquired. And at that time, the reserves in 2015 were £40 million. Today, they're £45 million, notwithstanding the fact that this council has been running losses, cash has been draining, there has been significant diminution in the value of the properties. I also reference today's property values, combined the investment properties and the other land properties held by the council at 180 million, and reference them to the valuation, combined valuation in March 2022, when gilt yields were 1%, and they're now approaching 5%. So I think it's inconceivable that the properties are valued today at the same value, thereabouts, as they were in 2022, when you'd expect there to have been a significant reduction in value. Added to which, since 2022, the House of Fraser store, which was acquired for £20 million, one might argue, because there's no income stream, and effectively, in essence, it will become a hole in the ground, has a value of nil. And the Mall, which cost close to £100,000, is today probably generating a rent of £3 million, let's say, round numbers, and on a yield of 10% would put a value of £30 million, added to which the offices should be yielding 6 to 7%. That is the norm for properties in Camberley, and the industrial should be yielding 6%. So it's my contention that once again, this council is relying on advisors who are not taking a sufficiently robust approach to the valuations. In the past, this council has been let down by the advisors in the name of Montague Evans, who clearly stitched the council up in terms of advising the council to buy the Mall, and Arling Close, which clearly didn't understand that interest rates were about to rocket. So I am extremely anxious, and again, making reference to the auditor's 50 or 60-page report, where clearly they identify this as a significant risk to the council. Now, I recognise that none of this makes any difference at all, because within a year or two, this council will not have to survive in the way that the leader felt was probably questionable. But what concerns me is that I believe that this has been dressed up in a way which is unhelpful to everybody. It glosses what I think is a very, very difficult financial position for the council. And above all, I'd be very surprised if West Surrey, or whatever it's going to be called, will take these assets on at these valuations. So it's a very, very significant criticism I'm making of this council based on a thorough investigation of the balance sheet of this council going back 10 years, comparing like with like.
Thank you for your comments. I'm not sure whether the Chief Executive or the Section 151 officer wants to comment on that at all. So, yeah, would you find it useful if Councillor Wilson provided a brief response? Then that's okay.
Yeah, I totally take on board all of your points. We do actually have them. The auditors are with us virtually today, so can I really urge you to either watch the meeting later on YouTube or to stay, because I intend to raise these points with them. I can't answer these points because it's a matter for the CFO, who is here.
I'm not interested in talking to anybody outside the room. I think it's a complete nonsense to have people who have responsibility for an area of the council which is very important not attending the meeting. So as far as I'm concerned, I'm not interested.
Thanks, sir. I think that's noted. Do you want to ask your second question?
Does the council accept that the complete absence of detailed information regarding the property assets leads residents to believe that perhaps something is being hidden from them, as in essence the council is now a property holding company with a modest customer services business?
The answer circulated is, we provide information on properties, both operational buildings and investment properties, annually on the basis as required by the SIPFA Code of Practice on Local Authority Accounting, with overall values. A property register is also published on the website, although not with values. Would you like to ask a supplementary?
Thank you very much, Councillor Cope. I did try to find the property register on the website. I failed. All I could find was some reference to a property in 2016. I could find reference to properties which were effectively unoccupied, but I couldn't find what I was looking for, which I'd been directed to here. I also find the whole approach by SIPFA completely unintelligible. And I'll tell you for why. The Mall and the House of Fraser were bought as investments. It's clear in the minutes of the meetings. But suddenly they've been switched to properties for regeneration. And as a consequence, because they are no longer investment properties, they will not be valued annually as they should have been. Also, because they are not deemed to be investment properties, any losses are taken to unusable reserves. So as far as I'm concerned, SIPFA is the sort of low-grade accounting qualification which effectively gives anyone the opportunity to have a pick and mix approach as to how they actually deal with very, very significant movements on the balance sheet. So I'm not terribly keen on SIPFA, and I feel that probably it is something that should be looked at as to why it is that we persist with this. How can it be that a council, which should really look at total assets, is given information or allowed to allocate between usable and unusable reserves, when clearly most of the reserves are actually pension fund surpluses? I don't think there are many businesses that have their pension fund on the balance sheet, and the pension fund surplus is actually an accounting quirk because interest rates are at the current level. So I think that probably SIPFA encourages people to believe that things are better than they are. So I'm very disappointed that this council, as I say, which has significant property assets, does not identify those assets more helpfully to residents. Okay, we can all have our view on the valuation, but I do think at least that in the accounts there should be more than just a passing reference to the property assets, which are the major assets of this council.
Thank you, Mr. Bain. Does the Section 151 officer like to come in on this question?
Yeah, thank you, Chair. As a local authority, we have no choice but to comply with the SIPFA accounting code of regulations. So you know, they are the regulatory body for the public sector. Those two properties mentioned are classed as investment properties in the accounts, and they are valued annually and have been for many years. You're right, there is a little bit of the revaluation increase or decrease. It does go through an unusable reserve. And again, that's an accounting, a sort of local authority accounting adjustment that's made to mitigate any impact on the taxpayer. Although obviously normal accounting rules would apply if there isn't a valuation in the revaluation reserve, but that is a statutory override that has been agreed by the government as opposed to SIPFA. Happy to have a discussion with you generally about any of your other questions, and I'll be in touch to see if you want to do that.
Thank you. That concludes public question time. So, Mr. Bain, as you know, you're welcome to stay, or you're welcome to see you later. Okay, on to the next agenda item, which is agenda item 5, external audit update. I think we've got Darren and Keith on the screen from Grant Thornton. Can I hand over to them to introduce their update?
Thank you, Chair. Good evening, members. So we have two papers before you tonight. The first is the audit plan, and the second is a progress report and a sector update. So I'll start with the audit plan. We set out the context and environment that you operate. So we recognise the continued financial challenge that you're facing, the wider backdrop of local government reorganisation in the next year or so, and regulatory changes such as the introduction of new accounting standards. Within that context, we set out those areas of the accounts that we consider to be the highest risk of material misstatements. They are described as significant risks, and they're set out on page 23 to 26. They are the same risks that we highlighted to you last year, and they are common to virtually every council within the country. We also highlight other risks. These tend to be a little bit more specific to your circumstances, and those are set out on pages 27 onwards. There are 4 there. The minimum revenue provision, opening balances, your response to the introduction of new accounting standards on leases, and accounting on a principal or an agency basis. We intend to start the financial statements audit now. We have started. We intend to do it in 2 stages. The first stage will allow us to undertake sample selection. A large proportion of the audit is sampling. Members may recall that last year we tried to do that. We were unable to complete all of our sampling work completely by the time the backstop came into force. So we're starting earlier. We'd select samples, we'll then give the council space to provide the evidence to support those samples, and come back in October to pick up the audit with a view to finishing the field work by December. The audit plan also sets out the value for money risks that we will consider. The starting point is largely the outcome of last year's work, and that provides the risk assessment basis. We haven't identified any new risks of significant weaknesses in your arrangements, but we do have those risks or those significant weaknesses that we identified and reported to you last year. The rest of the audit plan just reports those items that we're required to report to you, so our consideration of materiality, which drives our approach to sampling, audit fees, our independence, and other matters. The second paper, the sector update, that is as it describes it. We've highlighted for you those things that are happening within the local government sector that we think would be of interest to you and to help you discharge your responsibilities for governance. I will pause there, Chair, but I'm happy to pick up any questions that members may have.
Thank you, Darren, and thank you for your report. I'll open up to the committee. Does anyone want to kick off with any questions? Councillor Raikes first there.
Yeah, I just had a question on the timing. I notice in your logistics plan, which is page 40 of the pack, I think, but Audit Standards and Risk Committee in December, but actually we've got a meeting programmed at the moment for November. So I worry a bit about that because the next one after the November one would be February, I think. So just a question on that.
Thank you, Councillor. Through you, Chair. Yes, so we intend to report the value for money work to the November meeting. I think, as you say, given that we're starting or returning to the financial statements audit in October with the view to work through until December, we won't have sufficiently progressed that to present the findings of the financial statements audit to your November meeting. In our progress report, we do note the timing of your audit committees. And as last year, we have suggested that there may need to be an audit committee before your intended March meeting, so that we're able to report the findings of the financial statements audit to you ahead of the statutory backstop.
Thank you. I suspect that's something we can pick up and look at our diaries and agenda, etc. Okay, fine. Well, yes, I think we'll need to look at that and as a committee and with you work out something that works. Councillor Wilson.
Thank you, Chair. It's you just mentioned earlier about materiality, and I was just wondering if you could explain more what that means in this concept, in its context. Is it materiality and triviality? I think are mentioned mostly in page 31 and 32. Thank you.
Thank you, Councillor Wilson. Through you, Chair. So we determine what's known as headline materiality. It's a professional judgment. We base it on gross expenditure of the authority. It sets a level beyond which, if we identify any errors in the financial statements, if they're above that determined headline materiality, we would consider qualifying the accounts unless the accounts were amended. That's very much in a normal situation. I do appreciate that we're in this backstop position for you, and you had a disclaimed audit opinion last year and are likely to have a disclaimed audit opinion this year. Once we determine headline materiality, we also determine a performance materiality, which builds in a tolerance level for considering or addressing the risk of accumulated errors. So it builds in a tolerance between that performance materiality and the headline level. The concept of triviality is we set a smaller level. Typically for us, it tends to be 5% of headline materiality. And we use that measure so that if we identify any errors above that limit or that level, we then report those to you as those charged with governance. So that's how we use the 3 items that are set out on materiality within the audit plan.
Thank you. I'll jump in with a question next, if that's okay. On page 27 of the plan, where we're talking about the minimum revenue provision risk, the final sentence, it says, according to regulations, the duty to make MRP extends to investment property where their acquisition has been partially or fully funded by an increase in borrowing or credit arrangements. Could you just explain what that means? Is investment property in some way treated differently for MRP purposes than other assets?
Thank you, Chair. No, it shouldn't. And that's the point we're saying, in that wherever an authority has borrowed, then there's a requirement to ensure that there's a provision set aside for the future repayment of that debt. In the past, some authorities have argued that, particularly for investment properties where they have an income stream, that the income stream is sufficient to mitigate the need to provide a provision to repay the debt. So what we've highlighted there is what the expected treatment is, and what we will then seek to test through the audit. In addition, why we highlighted the MRP risk to you in the audit plan is because when we looked at your MRP as part of last year's audit, we weren't able to reach a view that the council was sufficiently following the regulations and the guidance. There wasn't a clear enough audit trail for us to determine that, so we're returning to look at it again this year as part of the 24-25 audit.
Thanks. Could I just ask a follow-up? When you say that you couldn't form a view, is that because of the previous disclaimed audits and uncertainties around the opening balances and things like that, rather than anything the council's done in the past year since you've been looking at us?
Thank you, Chair. It was partly that. It was also partly the sufficiency of the working papers that we had from the council for 23-24. So we couldn't immediately ascertain how the MRP that had been accounted for in the 23-24 accounts, whether that was complete and accurate. And time was also a factor, the very fact that we were working up to the backstop date of the 28th or 27th of February last year. So there were a number of factors that led us to report where we had got to in respect of MRP and the need to come back to it this year.
Thank you. Councillor Wilson.
Thank you, Chair. Yeah, it's on the following page, page 28, other risks identified. And this is mentioned quite a few times in your report. I think it's a change in treatment of leases, IFRS 16. And and it says that the Council's 24-25 draft accounts disclose a right of use asset balance of £47,000. Can you explain what is the risk to the Council or the risk to the accuracy of the financial statements due to this change?
Thank you, Councillor. Through you, Chair. So as I mentioned at the beginning, there's a new accounting standard, IFRS 16. It changes the accounting for where the council is a lessee. It requires the council to consider where it has a contractual relationship that involves a specified long-term asset. Where you do have such a contract, the accounting standard requires you to value that asset and bring that asset onto your balance sheet. And also to recognise on your balance sheet the liability to make payments against that lease. So that's the change. Previously, leases were categorised into a finance lease or an operating lease. Finance leases would have always been on your balance sheet. Operating leases wouldn't be. And operating leases, you would have just disclosed in the statement of accounts your commitment to make future payments under the contractual arrangements of the operating lease. This formalises it and brings the liability and the asset onto the balance sheet as of now. Whilst the indicative amount that the council has indicated that the right of use assets and the liabilities is quite small, we have to consider if what's been identified is complete. For local authorities, the definition of contracts and right of use assets that may fall under this accounting standard also includes any contracts where there's a peppercorn lease. So it could be a lease for £1 or a lease for £100. It still brings in a requirement to bring the asset onto the balance sheet with the associated liability. So there's a risk of completeness and accuracy.
Thank you.
Any further questions for the external auditor? Councillor Lee. Just 1 second, technical issue.
Have you got yours? I'll borrow yours.
Your light's on.
Oh, it's come on now. Oh, fantastic. It must be a bit slow on the Almighty. Right, so my first question was just around the document in general. It says it's commercially in confidence. Just to make you aware, it is in the public domain. So I'm not necessarily sure commercially in confidence is perhaps relevant to this document. Obviously, it's common in local government to put this stuff in the domain for transparency. I'm sure you'll understand that. My next one was around page 25. You talked about the investment portfolio of 95 million. Can you just remind me what you consider as part of the investment portfolio in that comment, just at a high level?
Thank you, Councillor. Through you, Chair. So yes, the first point you raised, we do appreciate this is a public document. Commercial in confidence is the default setting given to the reports. We should have removed that in sending that to you. But all that we're reporting here is intended for public consumption. To the second point of investment properties, I can't tell you what the makeup of that population is that's currently recorded as investment properties in your statement of accounts. What I can tell you, though, is an investment property as defined by the Code of Accounting for Local Authorities is an asset that's held purposely for investment and return. It's not for any operational function. and that drives its valuation. Appreciate the discussion and the response around the public question. Investment properties are valued on a fair value, which is their highest and best use that they could be put to. Whereas if it was an operational asset, it would be valued on existing use, in current value and existing use, which in many cases is likely to be a lower valuation.
So just for clarity, you wouldn't expect in that value to have the Camberley Shopping Centre, for example, in there, or the House of Fraser store?
I can't speak specifically to those two assets because we haven't looked at those assets and we haven't confirmed whether what their classification is and whether it's appropriate. Based on the response earlier to the public questions, I understand that they are classified as investment properties, and as part of our work, we'll confirm whether we think that's an appropriate classification.
Okay, thank you. Did you want to bring an officer in to answer that particular part of the question?
Would any officer like to comment on that? No? Doesn't seem like it.
Sounds like a particularly technical question, slightly naughty of me, do forgive me, Chair. My next question is around page 26, so I'm referring to the page numbers on the horizontal. So you refer to Surrey County Council and obtaining pension insurance. Would you see that as a routine process, or do you have concerns?
Thank you, Councillor. Through you, Chair. That's a normal routine practice.
Okay, and then we move on to the section, let me just grab it, so I'm scrolling back and forth. So it's page 34, which is the IT audit strategy. So you mentioned just two systems there. Obviously, back in the world of IT, there's an awful lot more systems normally. You've got ETL processes and things like that. We look at the payroll process, iTrent, for example. So are you checking to see if everything, for example, in the payroll system is fully contained, i.e. there's no other processes that link into that? Because obviously from a financial insurance perspective at a tech level, one would assume that, and on the accounting system, you've obviously quite a lot of automation. So have you looked beyond those two applications to see what connects into them?
Thank you, Councillor. Through you, Chair. So clearly with any audit, we don't look at every single control. What we've highlighted here are those two systems whereby they may contain a control that we consider is relevant to the audit, and therefore we're going to assess whether that control is operating as intended. We appreciate there are many other systems, but we haven't determined those other systems to be of a significance to our financial statements audit that they would need separate consideration.
So, for example, you'd be confident that the financial information coming out of the iTrent system and into the bank system for automatic payment is fully automated with no human able to interact with that process. You're confident at that level?
I think it's hard to say I can give you any confidence on that. And what I'm saying is that where we've identified a control, say through the payroll iTrent system, then we would test the operation of that control. In the instance that you just highlighted about payroll, we would also test to ensure that payroll costs and payroll made were reasonable and what we would expect against some analytical techniques to the operation of a specific control. Without knowing which controls we yet to determine and test, I can't give you the assurance that you seek.
Can I just check that no one else in the committee wants to come in? I've not a problem with you asking lots of questions, Councillor Lee, but I'm just conscious there are other people who might want to feed into similar issues. Yep. I'll go to Councillor Wilson, then we can come back to Councillor.
Okay. Thank you, Chair. So I think this is a small question. It's on page 40. It's about the timeline for the 24-25 full audit, and it signs off on the 31st of December 2025. So you've probably dealt with local government reorganisation elsewhere. So I'm wondering what would happen. I mean, it's not next year's or the current year's audit, but the one after the 26-27 year audit. If the council ceases to exist in April 2027, what happens to that audit? Is it picked up by the responsibility for it picked up by the successor authority, or does the organisation effectively no longer exist? I imagine you must have had to deal with this sort of thing in the past elsewhere.
Thank you, Councillor. Through you, Chair. Yes, we have had to deal with this, and yes, the audit would still need to be undertaken, and it's affected through the successor bodies.
Okay, thanks.
Councillor Lee, did you have any further questions?
You kindly allowed Councillor Wilson to steal my 31st of December question, which was going to be my pièce de résistance, but beaten to it. Good strategy.
Fair enough. Okay. Councillor Garrett.
I thought I'd leave it as I'm not a committee member until the end. Just reference the, you said about the sampling you are doing, and last year you had a few issues, so you're moving it forward to do your sampling. Do you foresee any repeat of the issues you had last time? Was there a particular reason why there was problems last time?
Thank you, Councillor. Through you, Chair. So I don't think we were able to complete our sampling across many areas. Debtors, creditors, income, expenditure. If you go back to the audit findings report we presented to you, I think it might have been January or February of this year, you'll see we highlighted what we tried to do, how much we were able to do of that, and what was outstanding. And what defeated us was time. I think perhaps it wasn't unexpected that there were those difficulties last year. There was the council adopted an accounting model which was unusual, so not all of the transactions were on the general ledger. We've been assured that that's not the case for 24-25. I think also with the lack of audits in the last few years that the councils had, there might just have been that loss of understanding and awareness of the type of evidence that needed to be put forward to satisfy an audit inquiry. I'm hopeful that with the experience of last year, with some of your leading finance officers attending our chief accountant's workshop, I'm hopeful that those two elements will mean there's a better understanding of the type and the depth of evidence that's needed to satisfy any samples that we may have selected across all areas of the financial statements. So I can't give you any assurance that it's all corrected, but I remain hopeful.
Thank you. Do we have any final questions? Doesn't look. Oh, no, Councillor Wilson, just in time.
Apologies, I thought I'd just better mention it. There was a link, I can't give you the page number at the moment, to a webinar on your website about local authority audits, and the link doesn't actually work on this document that we've got, and I went onto your website. I found other webinars, but I couldn't find the one that was referred to. Would it be possible for you to send a link of that to the officers to pass on to the committee?
Yes, of course, Councillor Wilson.
Thank you.
Well, thank you very much, Sharon. Thank you for presenting. Obviously, you're welcome to stay online for as much of the rest of the meeting as you would like. We'll move on now to item number 6, Treasury End of Year Outturn Report. Yes.
Yeah.
Thank you very much for reminding me, Eddie, because I had completely forgotten about that. We were going to rejig the agenda and move the informing the risk assessment up to item number 6, purely because we felt that it was quite a relevant item for our external auditors. So without further ado, we'll move on to informing the risk assessment. And is the Section 151 officer presenting this one?
Thank you, Chair. This report is something that we kind of do annually, and Grant Thornton have asked for the committee to review the management responses. So obviously there's quite a lot in there, so I'm not gonna go through it. I don't know if Darren from Grant Thornton's got anything to say on it, or we can just pass over to the committee if they've got any queries or concerns with the detail that's in the report.
Would you like to say anything on that, Darren, at all?
Thank you, Chair. Yes. Well, just to say firstly, so this is not a Grant Thornton report. So we have made some general inquiries of management, and you can see what those inquiries are. You can also see what management's responses to those inquiries are. The purpose of it coming to you is for you as a committee to consider whether any of management's responses appear odd or unusual against your knowledge of the council. So we're not necessarily saying you need to have a detailed knowledge of A, B, or C, but it's through your natural role whether any of the responses are such that you would question them and then bring those to our attention. And this is, as Vicky said, this is a normal process, and it informs part of our risk assessment. So we have already taken into account the responses that management have made as to allow us to produce the audit plan. And it's now an opportunity for you to say whether there's anything there that doesn't strike you as quite right.
Thank you both. Do we have any questions or comments from the committee on this paper? Councillor Wilson.
Thank you. I'm a lay person. I've got no qualifications at all in this, so I'm not sure if I'm interpreting the vocabulary the right way. It's page 147, and the question was, were any changes made to estimation processes in 24-25, and if so, what was the reason for these? I mean, there was quite large restatements of debt interest payments recently, I think it was in that year, and large restatements of the valuation of the reserves. Would these count as changes made to estimation processes?
I don't believe they do. They were more correcting things in the accounts and keeping things up to date. In terms of, I suppose, a value for money assessment, the level of reserves will be taken into account, of our position moving forwards. Obviously, we'd reported a lot of that information in year, and I think it forms more part of the value for money, what you've referred to, than estimation values.
That's great, thank you, understood.
Anyone else want to comment on this item? Councillor Lee.
I guess my first question is, when was the last time these questions and the management responses were done, would be my first question.
They are done every year. I suspect your next question is, when was it last presented to committee? I don't know the answer to that one.
That's okay.
Possibly not.
So were they done, for example, in 2020, 2021?
Obviously, I wasn't here then. I assume they were. We'd have to look back to see if we can find that. I can't answer that for you right now.
One wonders if there were no audits done for those years and they were backed up at the end. I'm guessing the answer might be that no, it wasn't done. So
Potentially, yes.
So I think it's good that you've brought this report. It's something in business that's quite common to see at a senior level. So I think it's very much welcome in terms of the openness and transparency, even if some bits may make slightly uncomfortable reading for some people. But I think it's important we have that openness and transparency, so I certainly very much welcome it. It would be good to know about the audits, particularly from 2019 onwards, where there's obviously a substantial problem over that period, which is why they've not been properly audited in the way that we'd expect. And obviously it then means that we can't get that full audit from Grant Thornton because they can't depend on previous numbers.
Would you like to say anything on that, Section 151 officer, or was that just, I think it's just a comment really. Anyone else on this item? No, looks like we are done with that item. Right, we will move on to the Treasury end of year outturn report, which is agenda item 6 in the pack. And I think, again, Section 151 officer, that is for you.
Yeah, thank you. So this is the first combined capital and treasury outturn report to this committee. You'll recall that for the budget papers, we had the first capital investment strategy document, and this report is sort of moving towards that combined approach, just because the two are so interlinked, it makes sense to provide full details. You will note that the capital programme section is the same as the one that was presented to Performance and Finance Scrutiny last week as well. So section 3 details the capital programme, which was significantly underspent against budget. Actual spend was 5.5 million. And paragraph 3.4 and 3.5 are the sort of key paragraphs where it outlines the schemes where the money can be released and that scheme removed from the programme, predominantly because they've been completed, and some just because there's some underspends, which is fantastic. The table splits it between those that were reported at Q3 and then further updates for Q4 that needs being approved by the executive. And 3.5 highlights the schemes that have been reprofiled into future years, just because of the timings of the spend. So it's future year project completion. So section 4 contains the details for treasury management. We had 11 million in investments and 183 in borrowing. So interest receipts in the year was 1.3 million and borrowing cost was 6.8 million. And that was in line with what we've been reporting in year. The report also contains details of the Treasury and the prudential indicators, and we didn't breach any of those in year. So hopefully there's quite a lot more detail in this report than you have had previously. Prudential indicators generally are reported in the outturn reports, and at strategy meetings, they're generally not reported because a lot of them are balance sheet driven, but some of them, we can report on, and we'll continue to adapt the monitoring report that you receive in year, so you're getting as much information as you possibly can. Open the floor to questions.
Thank you, Councillor Lee. You want to get it?
Yeah, the first one is declaration of interest. So I've just spotted on page 86, Frimley Fuel allotments is listed there. Obviously, I'm a trustee, so I think that's a non-pecuniary interest. And I think my colleague Cliff is. Certainly not something I picked up when I previously looked through the report. So if we can note that down, that'd be great. Do you want the same for you, Cliff? And the same for Cliff.
Yeah, absolutely. I'm sure we'll note that. Anyone else with some questions on this one? Councillor Wilson?
Thank you. Yeah, and thank you for the report. I see it is kind of still evolving, and it does get clearer and makes more sense. There's the bit on page 84 under the capital programme. It says there are a number of finished schemes which will reduce the council's underlying need to borrow for capital purposes and generate a saving to the revenue account in respect of MRP and interest. Can you give some examples of these schemes, or should we be looking them up somewhere else?
That the table in section 3 does contain those schemes. Let's get the right paragraph. So 3.4 lists all the individual schemes and the amounts that can be released. So 1.787 million can be released from the capital programme.
Right, yeah, okay, I saw that. I was just wondering if there's a way to, because it says it generates a saving to the revenue account. Oh, that's because they came in under budget, is that right?
Yes, correct, yeah.
Great, got it, thanks.
Thank you. Can I just jump in with a question? It's possible that I'm misunderstanding. Paragraph 5, under the MRP, it talks about unfinanced capital expenditure. And then it says, this is detailed in section 4. I was struggling to understand what that was my first question. So what is the unfinanced capital expenditure? What was that on? Is that listed anywhere?
It's not specifically listed anywhere. That is the cumulative position of the council, the capital financing requirement. This is where it kind of gets a little bit techie, which obviously is listed in the statement of accounts. So it's all the I suppose unfinanced capital expenditure since the capital financing requirement started in 2014, minus the MRP that we've provided for to date. So it's a accumulation of many different capital schemes, but we don't kind of list them separately here. Happy to sort of run through with you separately, but that isn't something that we really. It gets quite techy if we try and kind of list some of those things out. Some authorities do it in more detail than others, so it's not comparable across authorities.
Thanks, but I suppose if there was one large outlay, so if I'm not saying there is, but we've got a sum of 1.5 million, we would know if one of those was sort of a 750,000 unfunded capital expenditure, because that would have had to be approved elsewhere. Is that correct?
Yeah, so in the capital programme, it highlights how we're going to fund the capital programme. So we budget for funding some by capital receipts or contributions, and then obviously the remainder by borrowing. So as part of the budget for the capital programme, you kind of approve, in essence, the amount of borrowing, and then the prudential indicators and the affordable borrowing level are approved in that sense, as well as the interest costs and the minimum revenue provision for the revenue budget. So it all kind of interlinks, and I try not to get too techy in this forum.
Thank you. If you just humour me one more question on this topic. At 5.3, it talks about how it will be dealt with respect to the MRP, and it says it'll be chargeable to the revenue account the later of the next financial year of when the asset goes into use. I mean, presumably a lot of this stuff is fixing things we already own and stuff like that, so mending roofs, etc. So at what point does that asset come into use, and at what point does it start to have an impact on our MRP, because it's an asset we already own?
Yes, it's when the scheme's finished. So if you're doing the project, over 2 years, it's when that's when that's effectively finished. I suppose the coming into use is more relevant when you're sort of having a new build, or you're doing some major renovation, and a lot of the kind of more fundamental maintenance, structural works, things like that, tend to be just in the same financial year, so it doesn't quite come into kind of play until a bit later, if that makes sense.
Yeah, no, it does. Thank you. Anyone else on the committee you want to come in on this? Councillor Wilson.
Thank you. Yeah, it's on the Treasury section, I think about 4.5, and the sort of average interest rates paid on long and short term. I mean, in reports in the past, we have had like a list of all the short-term loans, but I don't think we really need that. But the one piece of information, or two pieces of information, I guess, that we don't have necessarily from this is what is the highest interest rate being paid on any short-term loan at the moment, and what's the latest interest rate? Because if we're looking at, say, council considering asset sales, and the capital receipts could mean that that's the rate that we don't have to pay, if that makes sense.
Yeah, absolutely. That's, I suppose, when we've done the analysis of selling assets, we use the latest position on what we're currently paying on our borrowing. I don't have that to hand. I can come back to you, and we could, put that in the minutes if needed. But obviously, anything that we took out, depending on the duration that we took it out. So we've got some at 5 point something%, but obviously the rates at the moment, are much lower. So we predicted that rates would come down. So, we tried to keep the borrowing sort of as short as possible to take advantage of the reducing interest rates. So we could, if we rolled that short-term borrowing over, we could take advantage of a slightly lower rate.
Yeah, I just wasn't sure if there was like a massive difference between the interest rates on all the different short-term loans. They might be all substantially just about the same, but I know there's been a lot of movements in the gilt yields in the last few weeks, and I wonder if we've been lucky or unlucky, basically, with that.
Yeah, no, absolutely. We would benefit from that. Given that this was the up to March, the interest rates probably weren't actually that much different. But for this financial year, we should start seeing some reductions.
Thank you.
Any more on this item? Councillor Lee?
Thank you, Chair. I wanted to dive into, I think it's page 97. Which is a report entitled Ref Service Area. I assume that's still part of the Treasury Outturn report. Just wanted to understand, there's some forecast spend around what I'm assuming is the square vacant units of the shopping centre. So is that coming out of our borrowing to do that? So it's not funded, it's not self-funded by the shopping centre? I just wanted to understand that.
No, that's part of our capital programme. Some elements of the works on our properties are part funded by the service charge by tenants, not all of them. So I don't have the details to hand as to which ones are. It depends on the leases of the properties, but it's definitely part of our capital programme. I think most of it, if not all of it, is our for that particular scheme is our cost.
Okay, so it's not self-funding then as a shopping centre, because you'd expect a shopping centre to pay its own way, presumably if it was an investment property, shall we say?
Yeah, potentially. Yeah.
Cool. Okay, thank you. The one that I've declared an interest in, I have no idea what it is, which I think, did I see it mentioned in there, which was to do with Frimley fuel allotments for £1,000 as a charity. Just wondered what that was.
I'd have to come back to you on that, in terms of what the detail of that individual scheme was.
Okay, thank you. And then line 45, I note from a previous meeting I attended, we've spent about 400 grand on legal fees. And I just wondered how that squares with the replacement sweepers we're talking about here. Because I think we're heading towards the end of a contract, aren't we? So is this in preparation for a new contract?
The sweepers are...
I think, sorry to interrupt you there, Nick has smiled and waved at me as if he's got all the answers. Sorry, Nick.
I'll hand over to him then.
Thank you, Chair. Thank you, Councillor Lee. I often smile and wave at you, but this one I think I might know the answer to. So the sweepers are a contractual arrangement. As I understand it, they should have been accounted for quite some time ago when the contract was first commenced, but it wasn't. So it does come in as additional capital expenditure, which has now been put into the budgets. They are part of the current contract, but they will continue over into any new contracts that we arrange with a new provider.
Oh, so they're ours.
Indeed, whilst they're operated by our current contractor, they will be handed over as part of the contract.
So hopefully they'll get more attention than a chewing gum machine had over the past 10 or 15 years on the asset register, which would be quite exciting. Cool.
Okay, any more on this item? Councillor Wilson.
Thank you. Section 7, Other Treasury Matters. 7.3, it's about training, and SITFA current Treasury Management Code of Practice suggests that best practice is achieved by all councillors tasked with Treasury management responsibilities receiving appropriate training relevant to their needs. Is that something that could be in hand? I know we've only got another 20 months or so of doing this, but I know I could benefit from some training.
Yeah, absolutely. The plan is to deliver training of whatever kind you councillors would like. So if you have any specific ideas or specific topics that you would like, general finance, specific treasury management, then please let me know and I will put that forward. We haven't got any dates set yet, but yeah, welcome any feedback in terms of what you'd like.
That's great, thanks. I've got just one more question, which on this whole agenda item. I was looking at page 95 and the risk management 15.7 about the CCLA property fund. And I know we've discussed this in the past, but there's just one aspect of it about its liquidity. And as we're getting down towards the end of the council's lifespan and the end of the council's reserves, which hopefully will happen in that order, it might be necessary to redeem this. And I think it says it takes 6 months to receive any redeemed cash from the fund. Is that something that we'll have to sort of put in the calendar at some point, 6 months into the future? It's going in when the council needs the cash from this investment.
Yes, potentially. That is sort of generating a reasonable return for us. We say on average it takes about 6 months. Obviously that can vary, and there is potential opportunity that we'd get it sooner, but yeah, that is something we can start thinking about. And in terms of local government reorganisation as well, with our partnering councils, quite a few of the councils in Surrey are invested in that particular fund as well. But yeah, we can flag that up and see if it's helpful to get that cash back.
And just on that, if quite a lot of councils all had to liquidate their investments at the same time, could that affect the value of them?
What's happened quite a few years ago, one particular council did liquidate quite a lot out of that fund. The fund was much smaller at that point in time. But when you, and I'll get the terminology wrong, I'm sure, but when you buy into the fund, because it's essentially property, you've got kind of a bid offer spread. So if many councils, for instance, if under local government reorganisation, everybody decided that they wanted to come out of that particular fund, there could be an incentive to new subscribers into the fund by having that differential with the bid offer spread. But that's something that we'd have to discuss with the fund to say that the fund is much bigger now. So, there isn't as much concentration risk at all. So it would need to be relatively substantial. In the past, the fund, if somebody took out quite a bit, they'd have to look to sell one of their properties and things like that, which is why they say on average it might take about 6 months. But the fund may be in a different position now, so we could have a conversation with them if that is the case.
Okay, yeah, that's understood. Thanks.
Thank you. Councillor Lee.
Thank you. One final one. There's a barking mad idea of preventing the council from selling any assets above £25,000. My understanding is this proposal sort of being tabled towards Surrey Heathborough Council, but not Surrey County Council, which I raised an interesting eyebrow about. I've checked, I've not seen it being tabled there as a petition yet. What impact would it potentially have on the Treasury outturn report if we were unable to exit properties over £25,000?
We've included capital receipts in our MTFS. So if we didn't achieve those, we would have to borrow more. So we'd have a higher borrowing cost, and we'd also have higher MRP as well, because we've assumed that we won't need to. There won't be as much unfinanced capital expenditure.
So that would be really bad for the council then, presumably.
Yeah, it would make our MTF position worse.
And would you recommend that Surrey County Council follow the same strategy and all of the other Surrey boroughs that are undergoing unitarisation? Would that have a similar negative impact on those, do you think? I appreciate it's a broad question, but just a simple observation, or if the Chief Exec would like to come in at that point.
I'm happy. I'm sure he's sitting uncomfortably at that. So I think most, if not all, the councils in Surrey have got asset disposal programmes, plans, and I would suggest that the majority of them, if not all, review their assets regularly to make sure that they're suitable still for the council, and they're still working financially for the council. So I suppose, yes, if that was applied to all councils across Surrey, and we could no longer use those capital receipts, then yes, it would have a detrimental impact in terms of minimum revenue provision and debt interest. The other thing to note is that both Spelthorne and Woking Borough Council are actively selling, and that's what they've got commissioners in, which has come from the central government. So, the government are kind of encouraging them to sell assets as well.
Cool. So I guess that would be absolutely disastrous across Surrey to limit it to £25,000. Does seem a barking mad idea. Sorry, Nick, did you indicate wanted to come in?
Would you like to come in?
Thank you, Chair. Thank you, Councillor Lee. Mrs Radford's right on a number of fronts there. I think in terms of the MTFS assumptions that we all have as local authorities, clearly if there are or is a reliance on the disposal of assets to obtain capital receipts for whatever reason, that is inevitably going to have an impact on the council's finances and the financial projections. And those capital receipts obviously reduce the level of borrowing that we have, but also can be utilised for things like transformation. Clearly, we're going through a transformation programme, as are other local authorities, and you will need capital receipts to facilitate that. There's also the argument about unnecessary retention of assets that are either a financial burden or not part of the council's core business, so that's really quite critical as well. And also I'd highlight the fact that there will be a point in time when the decisions aren't entirely our own. And from our understanding through the monitoring officer groups, the figure of £25,000 is incredibly de minimis in comparison to what's being mooted and what has been experienced by other authorities going through unitarisation. Figures closer to £100,000 are suggested. So £100,000 in terms of disposals and around about £1 million in terms of capital expenditure are the trigger points that we've seen elsewhere. So £25,000 isn't a figure that's familiar to us.
Okay, thank you.
Thank you. Any more? I think it looks like we're... Okay, one final question, Councillor.
The petition we speak of in terms of that, do you know if it's been presented to any other local authority apart from Surrey Heath Borough Council by the Conservative campaigner?
Do you know?
Thank you, Chair. Thank you, Councillor Lee. I'm not aware. I have to admit, it's not something that clearly I've asked other local authorities or the Chief Execs about.
The petition that's presented to us is only worded at Surrey Heath. It's not worded at other local authorities.
Yes, that's correct.
Okay, moving on to agenda item 7 in the pack, which is internal audit annual report. I believe the monitoring officer is going to lead on this one.
Thank you, Chair. Good evening, everybody. So this is the annual audit report hopefully it's recognisable from last year. It's a standard report which is brought to this committee once a year, and you'll see that 20 audits were conducted during the period 24-25, and those there's a summary of those audits from page 104 onwards. You'll see that in those reports there were no audits given a nil level of assurance, which is very good. Most of them received substantial assurance, and there was only one that received a limited assurance, and that was for FM. And the recommendations out of those reports are always picked up in the audit tracker, which of recommendations. So unless there are any questions, the recommendation is paragraph 2, which is that this report is noted and approved by this committee.
Do we have any questions on the annual audit? Councillor Wilson.
Thank you, Chair. I guess it's probably more of an observation rather than a question. It's on page 104 under the finance audits, cash and bank, and it says cash receipting was tested in detail, including income received from card transactions, payments made through the kiosk, as well as online payments and telephone-enabled transactions. So the latest P&F meeting, there were options for the transformation programme, and one of the options hadn't been sort of costed yet. I think it was kind of waiting to be looked at. Was to close the kiosk and stop dealing with cash at the council. So, I mean, having cash is obviously a weakness that needs to be audited and addressed because it's so liquid, people can just take it basically. So maybe that transformation programme option, while the cost saving actually cuts out a potential risk of theft or fraud as well.
Yes, I would agree with that. Yes, thank you.
I'll jump in with a question now, if I may. I suppose, as I understand it, and correct me if I'm wrong, sitting under sort of all of these audits is something called the audit manual. And I just wonder, I know you knew this one was coming, so what is the audit manual and how often is it reviewed and what is the mechanism for that?
So you've probably noticed I'm not Alex Middleton, the council's senior auditor. He left last month to take a more senior position with another authority. So I'll try and answer that question. So the audit manual is basically a document that sets out the reasons for internal audit, so the legislation and guidance that requires councils to have internal audit. Then it sets out the procedures and types of audits that internal audit will cover, and it's basically it's a procedure manual, and it's reviewed. The last time it was reviewed was November 2023, and I think in line with the way policies and procedures are reviewed in the council, it would be updated once every 2 or 3 years. So it's due for a review and update round about now. So that's something I can arrange to be done.
Lovely, thank you. Any other questions on this item? Councillor Betton.
Thank you. As you know, I had a great regard for Alex Middleton as an auditor and managing the auditing of the council. Question that I always asked him was, do you have enough resources to do what is intended? And the answer was always yes, but now he's gone. So I asked the same question of you.
So I also had huge regard for Alex Middleton. He's a really excellent internal auditor. It's a shame that he left. So, as you know, internal audit, there were 2 employed officers full-time, and I think that was sufficient to undertake an effective audit service. Now that we've lost Alex, as internal audit comes under my service, one of my service areas. I was tasked to undertake a business case and review alternative options for providing a good audit service. And one of the things that I'm looking at, and it's I've prepared a business case which has gone through CMT, and I've had input from Vicky, our Section 151, and Sally, our HR officers, and I'm looking at the option of externalising the service. That's in line with a lot of other councils in the area. And the organisation that I think would be appropriate would be the Southern Internal Audit Partnership. They're a big organisation. They have 60 to 70 auditors. So there's plenty of resilience and experience, and they're able to offer a robust internal audit service for us if we go down that road at a reduced cost. So it will enable us to provide a saving for the council whilst also covering all of the usual audits. And I was going to say at sort of a later point when we discussed the work programme for this committee that I can arrange for them to come in and do a presentation to you, just to reassure you that if we do use them, that they can provide an effective service for the council.
Do you want to come back on that?
Thank you for that. One of the changes were introduced recently was when an audit made recommendations. The recommendations weren't implemented as soon as they could have been. We were going to invite the management team involved to come and explain why. Will that still be the case with the external auditors, just for the sake of clarity of those who might be being audited?
Absolutely, yes. That's something that obviously I will still have oversight of internal audit, even though it may well be provided by an external company. So that's something that I can arrange to happen. So the next time that we're due to bring audit recommendations to this committee is November. So in the interim, I'll be checking on progress on the implementation of those recommendations, and if there are issues, then we can arrange for officers to attend, and that's something I'll continue going forward as well.
Excellent, thank you very much.
Thank you. Councillor Lee.
Well, first of all, unless committee objects, I think it's probably worth noting a vote of thanks for Alex's work over the period of time he's been here. He certainly answered questions competently and audited, I think, with a degree of diligence. He certainly satisfied my difficult questions around areas where I'm a subject matter expert, which shows that he's obviously digging into things. I think the councillor to my right was very complimentary, and I think, Chair, you've been complimentary as well. So I think perhaps if we put that as a note in the minutes, because I'm a firm believer of holding poor performing officers to account, but I think we have an absolute duty to praise those officers that exceed expectations. I think this is an example. I think the next piece I'd ask the question around is outsourcing. So outsourcing generally is presented initially as a money-saving opportunity, and that's done primarily because the company that wants to take over the outsourcing wants to win the business. So I guess where I'm looking to is, whilst we're only going to be short-lived local authorities, it's only going to be 2 years worth of work. What's the reassurance we've got a handle on that? I'm not saying we don't, I'm just looking for the reassurance.
Mr. Stevens is indicating that he'd like to come in on.
Thank you, Chair. Thanks for the question, Councillor Lee. I am going to hijack this. I know that Natalie was keen to answer. Through the transformation programme, which you'll be acutely aware of, we presented it to Performance and Finance Scrutiny Committee last week and have tried to keep councillors updated through its progress. We have a choose to leave programme. Essentially, if an officer leaves to take on a better role, in the case of Mr. Middleton, we have to consider whether or not we need to refill that post or whether we can deliver that in a slightly different way. This forms part of that transformational decision-making that we have to take. There is an efficiency that we can make through using an entity like SIAP, and therefore we are obligated to consider it as a meaningful way forward. The other challenge that we would have, you referenced the competence of Alex and his abilities. He's been here for 23 years, and knows the council inside out. To find someone in the open market when we have a limited lifespan as a local authority, we consider to be a significant risk where we could go through multiple phases of recruitment and prove unsuccessful at each time. So in order to be consistent, to provide efficiencies and also have surety, we felt that going down the route of an external internal audit authority or entity was the most sensible way forward.
Thank you.
Yeah, Councillor Benn.
Can I just offer a little bit of reassurance, Rob? As an auditor and someone who has employed auditors, it's always vital to have someone on the inside who knows what the auditors are going to be doing. And there were two, and now there is one. We have a person on the inside who knows about the council and the council's audits. And I think that is what gives me the reassurance that employing outside contractors is doable.
Yeah, I highly agree with what Councillor Benton's just said there. I mean, initially this sort of made my brain explode that we were going to outsource our internal audit, but a lot of local authorities do it and appear to do it successfully. But as Councillor Benton says, the key is to have someone overseeing it on the inside, which we seem to have. Any more questions on this? No. Yeah, Councillor Rakes.
So we have had two people, and Alex has gone, so we've currently got one, but would that person actually continue with the council? Is that the one that you would see as being on the inside of the council? So would the intention be to continue with that employment?
Mr. Stevens?
So that's currently TBC, and it is something that we need to thrash out as part of our dialogue with Southern Internal Audit Partnership, as Mrs. Boateng suggested. We will update you on the outcome of that. What I would also say, though, is it's not just the other officer that we have that understands how audit works. Mrs. Boateng has spent a huge amount of time working with Alex and sitting alongside him once it was common knowledge that he was going to be leaving the organisation to extract as much information as she possibly can. The other point I would raise is that if it were SIAP that we chose moving forward, they effectively work with all of our adjacent authorities. So where we have instances like CCTV or community services, they're already undertaking audits of those entities in those authorities. So there's a duplication of effort if we're doing the same. So actually there's a bit of an efficiency there as well.
Councillor Rakes and Councillor Levine.
Another question was whether they would have a bit more depth in some areas. I'm thinking particularly things like IT and other areas where no auditor knows everything. Would that actually be an advantage?
Yes, thank you, Councillor. That's a really good question, and that was one of the things that really attracted me to them. In that, because they've got so many auditors, there is the opportunity to have specialist areas, particularly with finance, IT, all of those areas. We obviously had two very skilled internal auditors, but you can't be an expert in everything. So that would be covered off by using this option. We'd have specialist auditors.
Councillor Lee. Yeah, I was going to prioritise committee members, but I don't really mind. I'll go for Councillor Garrett.
Thank you. I'm just following on from the debate. Firstly, I totally agree with everything about Alex. I only had a few dealings with him, but he was a very switched-on gentleman. And when I was been in these meetings, he was certainly knew his stuff. My only question relates to when I say procurement process. Do we have to follow our normal procedures? Okay, I'm getting a shake of the head, which is good. How long is that likely to take to get them in post, though? Because I'm conscious this is actually quite a key thing.
So no, we don't have to follow normal procurement processes because SIAP and the others that I looked at are all run by local authorities. So there's provision under the Local Government Act that enables us to to undertake this sort of exercise and join up with those sort of partners without going through the usual procurement process. And in terms of timescales, I was told that this has been done with another authority for as quickly as within 3 months. So that they said they can move as quickly as we are happy to. So it can move quite quickly.
Councillor Lee.
Thank you, Chair. I thought I'd go with my next curveball. So it's page 111, IR35, which is an interesting one. So obviously, auditors continue to offer help and advice in regard to the IR35 off-payroll working arrangements for contractors working in the public sector. And then there's a non-compliance could set the council back thousands of pounds in fines. My observation around that is obviously there's very legitimate reasons for using IR35, particularly for bringing in external resources for specific periods of time, and I say resources rather than people because that's key, which obviously then offers a cost saving to the local authority. I presume that that piece of knowledge won't be lost, or we'll make sure that we're not losing out on situations like that, because obviously IR35 is the kind of slightly bonkers mess for outsourcing of labour for specific projects, shall we say. So it's quite important, I think, that piece of knowledge is kept hold of, because of course going forward we're probably going to need a lot more of that short term as we go through unitarisation. I would imagine the demand for that, I'd be surprised if it didn't increase, shall we say.
I can see that Sally's put her camera on, and I know what she's going to say, because when I obviously, as Nick has alluded to, when I knew that Alex was leaving, I sat with him for every week for at least an hour, going through all of the different areas of work that he undertakes, just to make sure that I could have continuity once he'd left. And one of the things he referenced was IR35, and that there are specialists in HR that know as much or more than he did in that area. So I think that is covered in our HR officers. Is that correct, Sally? Yeah.
That is absolutely correct, and exactly why I turned my camera on, and so I was expecting to need to confirm that. So thank you, Ms. Sperato.
Thank you. Any more for any more? No, looks like we are moving on to agenda item 8 in the pack, which is annual review of the effectiveness of the internal audit system. So
That's me again. That's me again, trying to do an impression of Alex. So this is, again, an annual report that's brought to this committee, and it's fairly similar to the last one in that, but with the difference that it looks at how the internal audit service meets the 7 recognised standards under the Global Internal Audit Standard. So at para 3, it sets out the 7 standards, and then the following paragraphs explain how the internal audit service meets those requirements. So the recommendation is at paragraph 2, which is just asking the committee to approve and note the report. Happy to answer any questions. Thank you.
any questions on this item from anyone? No, looks like we're getting off lightly on that one. We've already done agenda item 9, so that just leaves, I think, agenda item 10, which is the work programme, Eddie. Is that you?
Yeah. Thanks, Chair. As you'll see, the proposed committee work programme is included as the last item in the agenda pack. The only thing to mention as well, which Ms. Boateng has already mentioned, is the presentation in respect of the future of the resourcing of the internal audit function. Other than that, nothing significant to draw out.
Councillor Lee.
Chair, obviously with unitarisation in full flow and elections expected for May next year to form the shadow authority, should that become a strand this year of this committee's work programme, understanding how that piece is going to move forward? Because obviously from an audit perspective and an understanding perspective, it's quite complex, because you've got in effect a carve out from county, which is one side of the structure, but you've obviously got an acquisition on the other. So we're in effect being acquired in kind of the corporate world. So I would imagine there's quite a lot in terms of the audit piece that could be quite crucial at that point in time, particularly as we start getting into the flesh of an acquisition.
So just so I'm clear, are you suggesting that we have some sort of standing item on our agenda to discuss the impact of unitarisation on audit? Is that what you're suggesting?
Oh, I think it's a bit more of understanding the process and what's going on, because at that point you're going to start to see departments disassembled, other departments assembled, and when you go through an M&A, the most highly risky time in an organisation, particularly in terms of fraud and other things and serious mistakes, is around an M&A. Now, doing a carve-out is one thing. Doing a minimum of a 4 or 5 organisation acquisition at the same time is very complex. And at some point, there's going to need to be some quite detailed oversight as to how those things start to bolt together. And I would imagine from an audit committee perspective, that's quite complex to understand what's going on there. Because presumably, in terms of at least some of the acquisition piece, we're going to need to understand how we're interacting with the shadow authority. That's going to be crucial. Because as things are spun up and spun down, there's going to come a point where we will have our final meeting in probably February 2027 before we're abolished. So it's understanding all of that and making sure what's handed over as well. And we know that Surrey are racing ahead. So, we're seeing some quite scary things with Surrey trying to control the agenda. And actually, it's more about understanding our agenda. So I think getting it in as a work stream now would be crucial.
Yeah, thank you. I've caught up with what you meant now. My brain was clearly not functioning very quickly. I think that's a very fair point. I think something we could look to build in. Stephen, do you want to?
Thank you, Chair. If I can come in there. I think you're right, Councillor Lee. There are a number of challenges that LGR presents in terms of this particular work programme. The predominant one actually being the capacity to deliver some of these reports, and also the impact that actually LGR might have on the municipal diary. It's a conversation that we've started to flesh out as an officer group, and the leader of the council is aware of it as well through conversations we've had this and last week. When you start to project forward the timetable for LGR, you have the formation of joint committees, then you have the formation of the shadow authority, and that takes resource. So actually, one of the biggest risks that we have is the loss of resource within this organisation and others to deliver our essential services, because they're being dedicated towards those joint committees, towards that shadow authority, and then beyond. So there's a large amount of transitional resource that I know Mrs. Kipping is very concerned about that we may lose. So we are going to have to look at all of the diaries and the delivery programmes that we've got and see how they could be impacted. And at this point in time, it would be a speculative assumption, because we don't know which officers we may lose to a new entity and at what point in time. So we are trying to fathom that. What you probably will see coming forward is more elements of the risk register reflecting that as a significant risk for our resources and our service delivery.
Thank you, and that's part of my drive, is shining the light on just how much we're achieving within existing officer resource, and hence just highlighting the IR35 piece as well, because when you head into an M&A space, when you're taking over, it's basically a 1.3 billion pound transformation. You would expect on a project of that scale to maybe have 400 to 500 full-time people working on it. It's a huge undertaking, particularly when you look at the complexity of what's being proposed. And the question, I think, in my mind, to a certain degree, is how much are Surrey County Council expecting us to shoulder the complexity of that resource? What are they spinning up in terms of that resource? The transformation alone, cost-wise, you're running into millions and millions of pounds. So again, from the audit perspective, and how our teams here are going to either be supported or backfilled, and if they're not backfilled, what's the impact?
Yeah, I think it's a very, very valid point. That's certainly one for us to bear in mind as a committee. Does anyone have any other comments on the work from Councillor Wilson?
Thank you. Yeah, I was just wondering if we need to have a sort of marker somewhere about the extra meeting that the external auditors asked about earlier, so that we can sign off or see their report before the audit is signed off for 24-25.
I think, Councillor Wilson, that's why the March 26th meeting is date subject to potential change, quite simply. And it's marked as so on the website as well for anyone else's knowledge.
So that could potentially come forward to before the backstop or the deadline date, whatever it's called. Thank you.
Thank you. Any more comments on the work programme? No? Okay, in that case, we're done. Good evening.